Is Mr. Soros back to the markets when Great Britain's pound is dropping that hard? I don't know who is dumping this currency, but it recently has behaved more like the emerging market currency than one of the developed one of G7 countries. So we have serious problems with Great Britain. Recently, the pound was the one that been dumped that hard that more and more companies had some problems with liquidity. So that's one of the elements we'll talk about today. So I'm very glad to welcome you at the new episode of Blockrevision today. As always, a bunch of news regarding economy, stock market, cryptos, and so on, so forth. So let's get into it. Right. So we are jumping to economy view, and at first the theme of this video, Bank of England's liquidity cracks. So Bank of England recently been backed into economy and unveiling around $71 billion plan to support government debt. The decision was prompted by fears that collateral calls as soon as Wednesday afternoon could trigger a further crash in the gilt. Gilts are unnamed hinges on UK's bonds, and according to a Bank of England, we may right now go into a bit changed policy to regarding buying the treasuries. So the collateral requirements could create a situation in which forced selling drove up the yield on UK debt, and that's why they taken that approach. So can we really call it quantitative easing? As somewhere in the Twitter debates that phrase has appeared, I wouldn't be so sticky to this. These purchases will be strictly time limited and focused in one direction. They are buying bonds. So that might not be a QE, but that might be a prologue to this. So if you just get back to this, it's a timed move spread over a couple weeks. Given the situation in the US Treasury market right now, maybe we not observing that cracks as it's in the UK's one, but I won't be surprised to see something similar out there when this liquidity might be taken even further. So we are seeing diminishing liquidity in core markets, not only the UK, but there are some developed countries that have that issues that also flag risks. And this is why the fiscal injection might be necessary to not to fall this house of cards apart. So what about the US? Mrs. Yellen right now affirms that we haven't seen liquidity problems develop in markets, at least to their knowledge. That kind of deleveraging that could signify some financial stability risks haven't been found yet, but by far at least. About taking consideration in what quantitative tightening they are about to conduct, such solutions might be addicting for many economies when those headwinds start to look more severe. So that's definitely something that may spook many investors that kind of problems with keeping this system stable might be an Achilles heel for those countries. Goodbye, Tina. Hello, Tara. Tina is the phrase that stems to there is no alternative beside stocks and bonds. However, Tara is the recently been recalled phrase that there is an alternative. So Tina stems from that there is no other positions on the market from stocks and bonds, but Tara, there is rather alternative, gets us back to that more and more companies, hedge funds are I would say just taking a contrarian position and eventually running to cash. So for them, the cash is the one of the position that right now is worth taking the most. So many central banks aren't acknowledging the extent of recession needed to rapidly reduce inflation. Markets haven't priced that, so those companies shunning most stocks. Right now we are in an uncharted territory, and that's why many are just standing on a sideline. But where is market trough? That's some of the sentence to ponder. The bottom maybe when we really get into problems with the real economy. Right now we are somewhere in the bubble of knowledge, as we are just as interested in economy aspect and market aspects. We are seeing everything with 6 to 12 months ahead, and right now after those elements will be followed by the recession in the real economy. Right now we are more talking about the headwinds rather than really going this through, unless we call this very high inflation one of the peak of a problems of recession. The most however, the most important thing will be how the labor market will behave in next months, and how those prices will get eventually diminished without cracking everything down. So fundamentals and logic right now are almost thrown out the window. So by central banks that not listening to what markets are asking them, but rather playing with fire, controlling yield curves. So there are many aspects why the market's supposed to get lower valuations. And, the $1 trillion questions right now are where we might find a Fed's pivot, and where the markets are going from here. I find that the most important will be that real economic data will tell us, but it will take even more months to come. We got yet the employment situation report soon to be published, and the following week you get the inflation report. So we will be on pins and needles waiting to see what those numbers say to us. So the another bullet point I made: media are the tested strategy of finding the bottom. Psychological aspect of investing is that you finding the possible bottom where everything cracks down, and where many are screaming that's apocalypse in the media. Right now we are far from there, and that phase may last for even couple of months. So how to not get lost? One of the best strategies in the market is dollar cost averaging. So whenever you find a dip, you are just injecting some of your cash been set on the sideline. That's why I do find that it's better to keep some money in your pocket, not throw everything in the stock market at once, as it's very difficult to find the right bottom. We are trying to find it out by studying technical analysis as well as fundamentals, but there is always, remember, some probability of finding that bottom and not certainty. So if you if you've missed best 5 days when investing $10,000 during this 42 years period, you would earn just $655,000. So you will multiply your portfolio by 65 times, whereas when invested all days, you will be a millionaire by putting just this $10,000 into a market. So that's why you may go through this difficult human's nature fault when selling at the bottom instead of buying over there. That's why you need to reprogram your behavior and look for possible bottom with this thought that in the long-term approach you will be much further with your sum of your portfolio, the size of your portfolio. So that's why missing best market days might be really painful, and when you are trying to miss the worst days, very often you also will miss the best days, as after very strong pullbacks, those very strong rebounds also tend to happen. That's why it's better to stay in the game, but also setting some funds on the sideline. Right now, let's get to market outlook, and I would just like to show you trading view. So where we are right now, so we have formed this double bottom formation, and with this one and with this very bearish positioning of hedge funds and retails, I do find we will get another boost of positivity on the markets. However, there is still a big question mark where we might get. If we just manage to cross through 3700s, that is gap filling right here, we may have find a way strictly to even 38 or even 3900s. For now, I do rather expect that major US indexes, as well with with those European indexes will hang on in these areas for a while without breaking market structure that it already been cracked. So for this one, I do expect that major indexes may have a relief moment, but not for a long time, as mainly the direction is south. So that's the kind of a broader point of view on how the indexes are looking right now. So let's jump to Crypto Outlook. And in Crypto Outlook, I do have interesting finding. Realized cap hodl waves right now showing clearly that those hodlers that possess their tokens less than 1 month are diminishing in quantity. So as you can find, those holders with 1 month to 3 months that has joined the market during recent move are still in possession of those tokens. So there are many of investors that still have their positions that are keeping for a long term, or at least on a medium term, but it's also maybe even if they in a loss, that may be anxious for the broad spectrum of the market, as they are not experienced investors or traders. That's why they might be setting in a bigger panic. So on the one hand, we might be right around the bottom with this finding that we have much more of investors that are keeping tokens for a period more than 1 month, but still those are mainly newbies that may bring those valuations even lower. As we can find back in 2019, we have that low spread. Low spread have from investors that have bought Bitcoin during the end of the cycle, and that's something that really bothers me this time, where those spreads are a bit wider. So there is definitely something to ponder. You need to take your own conclusions. In market movers right now, let's jump to our calendar, and on Thursday we had initial jobless claims that I'd like to take an eye on. So in initial jobless claims we are falling. It means that the labor market still giving the Fed chance to hike interest rates even higher. When it start reverting, that will be more like a red light for interest rate hikes right now. However, those jumbo rate hikes may appear in the months to come. GDP price index right now is showing not that. GDP deflator is showing that we are still in very strong direction to upside, and as we can find, those changes in the prices of goods and services produced has jumped a bit over forecasts. So it's very difficult to tackle this inflation even when those CPIs are recently been a bit lower. So that's it from Thursday. Already we are waiting on Friday's inflation rate of one of the major economies of Europe. Also very important will be inflation rate of the euro area by large and personal spending. That will tell us a bit more about the condition of US market in terms of lagging indicators, being possibly a harbinger of some problems if that may occur. So that's it from market movers. Right now jumping to trade idea, and for today I have for you the the extra thought regarding markets that I recently brought, and that's to Australia 200. We have reached that level I've just told you yesterday. It may maybe not precisely hit that, but hopefully you had that alarms set maybe a bit lower, as I always, whenever I just setting this trading board, talking about the approximated area around this level. It's just to not be that exact. Usually I just put my trading box, and usually it gives some form of deviation from this trading entrance that is symbolized by this black line. So Australia 200 right now was the one of the position that already gave us a profit, but what about the next? It will be very important to check out what will happen around this level once again. If we manage to get it through, I would cut my position automatically, so I would even lower this, or even tighten this stop loss I make, as crossing through this level would symbolize the high possibility of heading even further to upside. That's why it's better to cut your position rather than count on some reversal somewhere above this area. So Australia 200 right now, for me, is the one to keep the position if you took it yesterday. If you haven't, just wait for a little little spike to this area, and you may take position even from here at 65 hundredths. So for me, Australia is still the one as my favorite in terms of possible risk to profit ratio. Australia 200, yeah, that's the one you may consider as the trade proposition. So that's it in today's episode. Thank you very much for watching. In terms of trade idea, I just gave my intake on what's the updated view on that. That's why it's not always that I would find a new position to add up to your proposition of a trade. It's not always an occasion in the market. Usually it's better to take an approach of a sniper, the market sniper, where you are just awaiting and trading very rarely. But this time was definitely the one to take position at. So thank you very much. If you enjoyed, just hit the like button, and we are seeing each other tomorrow, 8:45 East time. Bye bye.